Our philosophy is really focused on consistent results over the long term, right? And we truly believe that if we invest in having great people and a great process, that's going to result in great performance. So I'll double click on each of those. When I talk about people, we have a really deep bench, right? And that team-based approach. We like to say we don't have a single star manager, but really all of our managers are stars. We think of it like an all-star team, right? And why is that important? Like, to bring it to life in a portfolio, we don't have a bunch of PMs who are competing with each other. We don't have PMs that are trying to like take resources from each other. All of the best ideas are being shared and going into all of the portfolios. So we have, I would say, a super impressive team, 220 people globally, decades of experience in fixed income. And it's really started with this phenomenal foundation of talent that was at Vanguard when I came over. People who've been investing for 20 or 30 years, like incredible skill. And then over time, what we've been doing is just really sprinkling in talent from other firms, right? I mean, just about any firm that you can name that's like a high profile firm, I will refrain from naming them. We have brought talent in from for a variety of reasons. Maybe it was the culture wasn't what they wanted and they like the Vanguard culture. The opportunity, we're really transparent on what we're trying to achieve, and people see sort of like our mission and our how we measure success, and they get excited and they buy into that. So we built just like an incredible team, brought in new capabilities, in the last decade, because we look at everything over the long term at Vanguard. High yield, you're going to hear from people today, and these who are relatively new to the firm, but high yield, emerging markets, mortgages, global rates, etc. We measure our individual crew members and portfolio managers' success based on the alpha that they generate over a multi-year horizon. Right? It is not measured by AUM. How many portfolio managers did I interview who I said, tell me about your measure of success? And they're like, well, my fund grew by this much. And I was like, but how was your performance? And so that's something we really, really believe in. Our active process is rigorous. We got the top-down macro, the bottoms-up micro in terms of security selection, and there's risk management wrapping it every step of the way. I'll call out three things that are really, I think, unique. One is we are so vigilant on a concept we call the alpha waterfall, where at the top of the alpha waterfall, we have the most repeatable, the most reliable strategies, high information ratios, high Sharpe ratios, where you get the best return per unit of risk, right? We try to fill up our alpha on those strategies rather than relying ones at the bottom of the alpha waterfall, which are less reliable, right? So that really enables us to have more consistency in results, and it's just a smarter way to manage your risk budget. Absolutely. So an example of something at the top of the alpha waterfall, something like security selection. Right? So we have phenomenal credit research teams who are going to go in, they're going to look at every company, they're going to have a differentiated approach, and that has been a very reliable source of alpha. Also, some of our data-driven strategies, on the run and off the run treasuries, they send up signals which have very high hit rates, and we come to the bat very frequently. So very repeatable, reliable strategies. At the bottom of the alpha waterfall are things like taking yo on duration or FX, or things that, by the way, we do those things. We need to, when we have conviction and we feel like it's asymmetric, but we don't have to, because we try to fill up our alpha from the top of the waterfall.
So you talked about Core Bond, which has been around for many years, but you've also launched, and you alluded to this earlier, a lot of new fixed income products over the course of the past year. In fact, I think we looked at this. Your team has launched more new fixed income products over the past year than the last 10 years combined.
Yeah.
Okay, so tell us a little bit about with how you've been evolving the fixed income offer lately. Yeah. Where do you see Vanguard disrupting and bringing better value in the years to come?
So our mission is really to bring the Vanguard effect to all of fixed income. And when I say all, I mean index and active, I mean funds and ETFs, right? Across the whole maturity spectrum. Why? Because fixed income's not one size fits all, right? Some people want index, some people want active. They have different goals, right? We want to be able to customize it, and to customize, what you're talking to your clients about, you want to give them ideas. We have to have a full product suite for you to utilize, right? We're not trying to sell products, we're trying to sell solutions. And so to have solutions, we need to have everything on the shelf. It really is intertwined in our whole technology vision. It isn't really just a standalone. We have an augmented approach, right? Where the machine will be something you can delegate tasks to, so you can spend your time on more intellectual activities. It will create efficiencies and enable us to scale the portfolio manager's IP, right? So that is really, really important. We always have a human in the loop. Sometimes we have a human, they call it a human on the loop, or it's, that's really like you're orchestrating, you're a human at the helm, they'll say, in the era of agents, right? Which is where things are evolving rapidly. But our three pillars where we're investing are, first of all, enhanced insights. So think about big data. There's all the data out there we're talking about. Going out and getting that big data, processing it. We're using AI, we're using machine learning. Machine learning is a form of AI that we've been doing forever, right? Generative AI is the newer AI, and then agentic is where everything is evolving to. But on the machine learning, we're generating relative value insights. This bond's rich, this bond's cheap, through our enhanced insights pillar. The other thing that we're doing in that pillar is our credit research analysts. We're using generative AI to go out and summarize some of the earnings reports and some of those efficiencies. So we're getting unique insights, generating alpha, and we're also creating efficiencies. So that's enhanced insights. The second pillar is faster decisions, right? 30,000 CUSIPs in the global ag, trying to process all of that information, creating baskets, et cetera, moving faster. We have an optimization engine, which is a mathematical concept which will optimize to a model portfolio to spit out trade tickets and based on the risk levers you're going to do. But the key on this is that it's really just scaling our portfolio manager's IP so we can do it very rapidly. The key application is ETF. It used to take us, if a market maker came to us or an AP wanted to create an ETF, to create that basket, it used to take us 2 hours to come back to them with the ETF basket. Now it takes us 10 minutes. And our goal, we have an OKR on this, is to get that down to 1 minute. I'm going to step back a little bit because I'm going to look back at 2025 because I think 2025 is a nice representation of some of the things you were talking about. Bonds did exactly what investors rely on them to do. They generated income and stability. If you think back, right, strong returns. The U.S. Ag was 7% returns on the year. Most of that was from the income. Some of that was through the price rally. Bonds did protect portfolios in equity drawdowns. Remember DeepSeek when that happened and all the concerns about tariff and growth, bonds rallied. And it really overall, I think, validated that we are what we're calling this new era for fixed income. We're not at the zero lower bound anymore. There's actually a coupon and that income in and of itself is stabilizing. It gives you a great head start. And it's something many people had forgotten about for a long time. So that's the context. So going into 2026, we thought it was going to be another good year, but mostly about the coupon, clipping the coupon. We didn't believe that we were going to necessarily see a big rally, but you don't need to get a great return. So we always look to munis first for tax benefits, but like the concept of tax loss harvesting within taxable portfolios and such are things that are on our product roadmap. So those are things that we don't have any offerings currently, but it is something that we launched 23 products last year and 15 this year, so we're going to run out of things to do if we don't explore everything. So we have this team, it's IMFS is the name of the team, and they are part of the investment management division, and they're running all kinds of experiments with AI and ML, and they're collaborating with AI, this team AI Garage, which is specific to AI. So some of the things that they're working on, I mentioned briefly, but like mortgage prepayment risk, right? That's like what makes the world go around in trading agency mortgage-backed securities and analyzing that, taking in big data, for example, like what is the foot traffic in a mall? What are people's FICO scores? How many people check their credit report? Gives us like a heat map of the whole entire United States down to a small MSA on what that prepayment risk might be. And so that has been a phenomenal experiment that we've been running, and we've had some success there. That's one example. We're doing stuff in munis where we don't have to, for our higher quality credits, we're trying to make those less, more low touch for our credit analysts so they can spend more time on meatier areas of the market. And then there's some systematic trading capabilities that we're doing. And then the quantum experimenting is a collaboration with IBM where we're really with an eye towards speeding up our optimization.